Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla, let's go over the market, and let's figure out what happened today and what we can expect moving forward. So as usual, if you enjoy, don't forget to hit that like button. It does help a lot. This is not financial advice. I am not a financial advisor. And of course, my membership section on YouTube is live. If you're interested, for just $3 a month, I share my intraday thoughts on Tesla, such as all these kind of posts, constantly keeping you guys up to date with what I personally think is going to be happening, as I've been doing pretty frequently today with members because of a pretty important day, FOMC, of course, and there's just overall a lot to talk about on the actual chart. So with that being said, let's get into it. If you enjoyed, don't forget to hit that like button. Let's just get right into it though. Tesla closing the day up about 2.5%, closing at about $205.7 per share, which is pretty darn good if I do say so myself. A very, very nice looking day. Beautiful, beautiful bounce. And yeah, there's a lot to talk about. So let's just get this started. First, let's start off on the smaller time frame. Let's go from small to big. So 65-minute chart, right? You guys know I've been talking about this descending bullish wedge for the past few days now, right? And we've been waiting for a breakout. And I've talked about how, it's, again, not always, but much higher chance for this to break to the upside. That's exactly what's happening right now. Now, again, don't get too excited. It's a phenomenal start. Don't get me wrong. It's great. But there is still one more catalyst tomorrow that can potentially ruin this, which is, of course, Apple's earnings. If Apple's earnings doesn't just completely and utterly destroy the market, phenomenal. I'll be very happy. And I think Tesla is ready to go. I really do. So that's going to be the last major thing to, be cautious of, in my opinion. But with that being said, just strictly off of technicals and forgetting about all that nonsense, it's looking good. It's looking good. This is exactly what you want to be seeing for two reasons. Number one, we broke out, right? Again, bullish wedge. You get tighter and tighter and tighter. There was a chance that we could have got rejected from here and from this candle here and then went back down to 192 and then bounced. But clearly we didn't. A little bit of a bear trap here. And we just instead rallied off, broke above the resistance line, the blue line at the top, and it's looking pretty good. On top of that, RSI, you can see pointing straight up, peaking its head higher above these levels that kind of rejected out many times before, even though we're well below these levels technically where the stock was, which is great to see. Nice bullish divergence. And on top of that, we're also closing just barely above $205. There's still a little bit more work to be done. Maybe 206 is actually a little bit more convincing, which we're above right now in post market, which is good to see. But with that being said, a little bit more work is required for this to really, really feel good, but this is a phenomenal start, right? This is exactly what I want to be seeing. And I'll talk about where I think Tesla will go from this breakout, right? And kind of all my major levels I've been looking at, and the main one I'm personally expecting. I'd be surprised if we don't get at least sometime in November. I'll go over that very soon. Now, going over to the daily, by the way, the MACD looking pretty bullish. Again, our size looking great, broke out, looking great. 65-minute chart, truly looking great. Like I can't see too many issues other than this potential little area of resistance, right? You can see this kind of line right here. You can see, right, these candles, all these wicks right here acting as a support, right? This kind of 205, 206 level. And now we're pretty much right at it, meeting it from up to down. So can pose a little bit of an issue. So for instance, it wouldn't be surprising if we do something like this potentially. Let me go ahead and do this, right? Maybe a small little rejection and come back down to maybe like the low 200s one more time, kind of retest this breakout and then move up. That is a possibility, but I'd be pretty surprised if we just fall back under, unless Apple just completely vomits its earnings or something like that. So that's kind of what I'm seeing right now, just strictly off technical analysis. Now, looking over to the daily very quickly, what do we see here? So first and foremost, this is probably the most sexy looking hammer candle I've seen in quite some time. This is like the definition of a hammer candle. Like if you were to look up right now on Google or the, stock trading dictionary, not dictionary, encyclopedia, I guess. What does a hammer candle look like? Man, this is it. This. You can literally take a picture of this one right here and stamp it in that encyclopedia or trading book or whatever. Beautiful, beautiful looking hammer candle. Beautiful. Oops. Oh my goodness. Why is this moving? I've got to lock it. Let me go ahead and just very quickly apologize for this little technical difficulty. Let me go ahead and do that. Let me go ahead and just very quickly lock it so I don't do that mistake again. Right. Anyway, let's zoom in. So, right, beautiful looking hammer candle, right? It's obviously a reversal signal, right? Where you have essentially a very long wick. The longer the wick, the better. Ideally, you want the wick to be at least twice the length of the actual candle itself, this little thick part, if you will. We're obviously well above that. We're like triple at least, if not maybe quadruple, which is great to see. Beautiful long wick, beautiful hammer candle, and you want to see as little of a wick above as possible. And that's kind of what we're seeing here, right? If you take a look at it here, right? Same concept, very, very little wick at the top, ideal as well. The less the wick, the better. We obviously have a little bit of a wick, so it could be a little bit tiny better, but that's just like really pinpointing the most minor issues. All in all, beautiful hammer candle. Again, it's not confirmed yet. You want to see follow through, but it's one of my personal favorite reversal, I guess, signals, if you will, on the daily, right? It's one of my personal favorite. I like looking at candles. I like to see how the candle looks and what it's telling me. And this is telling me that Tesla's, man, especially with the 65-minute chart breaking above that descending wedge, it's looking like it's ready to reverse, man. It's looking like we based. It really does. Obviously, that doesn't mean that we can't ultimately go lower sometime in the future, right? There is still a possibility. We'll discuss that later. But as of right now, at least for November, let's just say roughly, it's looking good, man. It's looking good. I'm not going to lie. We're exiting oversold territories, and yeah, it's looking good, man. I mean, there's not much I can complain about this specific scenario we find ourselves in, other than Apple potentially vomiting the market down the drain tomorrow. So we'll see if that actually happens or not. But so that's kind of the main things I'm looking at, right? To put it simple. Now, the main thing to also talk about is, of course, okay, cool. Well, let's say, we break above, not break above. Let's say this is the start of the rally. And let's say we ultimately do start making our way up. Where do we go? So this is kind of like the rough outline I laid out for our members pretty much just before I started recording. And it's going to be as follows, right? Upside targets are as follows. The first and foremost, 210, 212, right? That's going to be quite simply because it's a level that has acted as a little bit of a resistance and a support right over here. You can see pretty much this line right here, right? Give or take, right? Anywhere between here to this line. You can see little areas of support here, and then we acted as a resistance here, and then ultimately we fell once we couldn't get back above it, right? I think we'll break above this. I'll be pretty surprised if we don't break above this, to be completely honest, right? This is just a level to watch out for. This can provide some issues, but ultimately, I think it'll be trivial. Next is, of course, going to be about $220 per share. What is that? Well, that's going to be quite simply two things. So first and foremost, it's just an area of resistance as well. You can see, right, if we move in on the let's do 65, right? This 220-ish level, you can see same concept, right? We acted as resistance right here, acted as resistance right here. So it's a bit of a resistance area once again. On top of that, on the daily, it's pretty much where the 200-day moving average is, right? It's just ever so below it, about 218. So that's something to consider. We also have the 21 EMA on its way down towards us. By the time we get there, let's say it takes a few more days for us to get there, let's say 3-4 more trading days or something, 21 EMA is going to continue following down, and it's going to probably meet us somewhere around the 220s, right? At the moment, it's obviously at 225, but like I said, every single day that we're not pretty much there, it's going to continue coming down to us. By the time we get there, I wouldn't be surprised if the 21 EMA is pretty much sitting around $220-ish per share, which of course will also act as a resistance. So that's why that's one of the levels I'll be looking at as a potential area of resistance. I think we'll go past it as well. I actually do believe this will be also ultimately trivial. It'll be less trivial than the 210s, 212s, but ultimately I think we'll get past that. Next level is 230. This is what I talked about on yesterday's video. If you haven't seen it, definitely check it out. But I'll reiterate very quickly, right? I'm not going to redraw it, but I'll just explain it. Where this is, of course, the level that rejected us after our earnings, right? We dropped, had a massive rejection, had a rally initially, obviously got to the 230s, the 231, got smacked back down, and then the sell-off continued, right? Now, this wouldn't surprise me if we get up here again. I'll get a rejection again, just like we did over here, and then potentially also set up that cup and handle pattern, which will look, I'll do a very, very, very quick illustration, but it'll look something like this. Just, again, very rough example, something like this. And then, of course, we set up the handle right here. So ultimately, come up to 230, and then we set up the handle, move our way back down, maybe somewhere to around the 210s, something like that-ish, and then I think breakout, and then ultimately have a nice little kind of situation happening, something like this, right? Just as an example, right? Something like that. So this wouldn't surprise me. Come up here, reject, zigzag through, essentially make a bull flag, break out, and then make our way even higher, right? That really wouldn't shock me if that happens to say maybe around the middle of the month, maybe slightly early, but somewhere around the middle of the month where this kind of situation plays out, wouldn't shock me whatsoever as well. And then the next level above that is going to be 240 to 242. This is my main level. This is the level I'm personally expecting us to get to. 230 is potential that we only get that high and we don't go higher. I don't think it is. My main level is the 240s because number one, we have a gap fill at 242, right? Number one, we already know 240s like 240, 242 is a pretty infamous level, right? Massive area of support here, resistance here, more support here, some support here before we broke down. Of course, now it's a gap fill, which usually when you come up to a gap fill, acts as a resistance. So a lot of resistances over there. We're very close. Actually, the 100-day moving average as well. But I think 50 is where it's close. Yeah, 50s is sitting at 245, and it'll slowly make its way. So by the time we finally get there, it's probably going to slowly trickle its way down to like 242-ish, let's just say. So that's going to be my main level I'm eyeballing that I think we'll get to. I really do. I really believe we'll get to there. And that's going to be my main level that I'm going to be starting to kind of being like, okay, well, how much more can we really go? How much more steam is actually left in the engine? You know what I mean? So that's kind of how I'll be looking at that. Past that, however, if we do go past that, which I think is still very possible, is about 250. And this is an important level for many reasons. Number one is going to be, of course, retesting the top of this overall massive descending channel, or AKA the actual flag of the bull flag that we are in right now, right? Like this weekly bull flag that like I've talked about many times, that will be the situation that we're in. But again, 250, 255, somewhere around that range is going to be the retest somewhere in November, potentially, of the top of this bull flag, the top of this channel, the red line, essentially. And on top of that, it'll also be a retest of this blue line, which was also that massive channel that we've been following for probably months at this point that I removed, right? But I just have the blue line, which was the bottom of the ascending channel that we were in. I'm sure you remember. Go back a week in videos and you'll see it. But this is going to be the retest of the breakdown. Because again, don't forget, whenever you break down or out, it's common to retest at some point. It could be pretty fast, could be pretty long, right? Kind of how it happened over here, where we had a breakout over here and then we came back, remember, to retest this. If I zoom out a little quickly here, right, this blue line, remember, we broke out above over here and then we came back down to retest that like a month and a half later, right over here, right? So it's very common to retest at some point. Just the question is when, not if, usually. And that's what that will be. If we come up to somewhere around that level of 250, 255-ish, it'll be essentially a retest of that breakdown. And that's going to be coinciding with the top of the channel. And that is an area I expect a pretty significant rejection, potentially even a massive rejection as well. And maybe even worst case scenario, we actually go lower one more time. So essentially, I look at it as follows to make it very simple. There's two paths. One path is essentially we come up to this overall like kind of general level, we get a massive rejection, and we actually make one more low, and we actually test the bottom one more time of this bull flag. That is a potential still. I don't think that's completely out of the out of the question essentially. Another option, and this is the more bullish option, is if we essentially don't really go back down. Maybe this was essentially the retest, though we were still a few dollars off, but it was pretty close. Maybe we come back up to somewhere around these levels, come back down, retest the 200-day moving average, roughly around here is where it'll be. And then we ultimately finally break out, and then we have a beautiful end to the year and start off 2024 on a very good note. This is like the bullish aspect, if you will, right? Those are the kind of things I'm looking at, but obviously the more farther out you look, the harder it is to project on technical analysis, at least in my opinion. I like to look at it in a kind of short-ish to medium-ish time frame, and that's kind of what I am seeing right now. So yeah, I don't want to complicate it too much more than that. So that's kind of the main thing, is the options flow is looking still bearish, but less bearish overall. Still, 1.3 million premium here, 800K here. This is the 280 put. So we still have some bearish flow here, but it definitely reduced compared to yesterday after FOMC finished. There's a lot less bearish prints, but there's still some to pay attention to, and some bullish ones slowly trickling in as well. So 1.3 million call premium here, for instance, 200 calls for December. So we'll see. I think this will start changing slowly, especially after tomorrow and after Apple reports. These could still be some hedges. You never know. So we'll have to take a look at it, how it looks maybe on Friday to see what people are really expecting. But based on just strictly technical analysis, Tesla's looking great. It's looking bullish. We have the RSI on the daily peaking its head way above and actually making a little bit of a higher high over here, breaking above these little areas that we found ourselves as well, which is good to see, even though we're still well below these levels as well. So ultimately, it's looking good. I'm feeling bullish. I'm feeling good about this. I think there's still maybe one more chance we come back down to retest the low 200s, retest this breakdown, very possible, but ultimately it's hard to be that much bearish at this specific instance, at least in my opinion. So we'll see what actually happens with that. But with that being said, thank you so much for watching. If you enjoyed, don't forget to hit that like button. And as usual, I'll see you tomorrow. Peace.